As we've talked about this outside of the interview and even outside of emails, you said that now is the time to do that. Why, coming out of 2020, which is when it seems like this source material came, you started thinking about this in 2020, and now it's early 2021, and you are geared up, ready to make a presentation. Why now?
I'm going to break that down into 3 and sort of 4 reasons. Number 1, before I get into the specific things with what is going on right now, number 1 is over the 100 plus years of the stock market, there is one thing that determines more than anything else how big your returns will be. You want to know what that one thing is?
Absolutely.
Time. Time to allow compounding returns to happen. It takes the same amount of time for something to double. Go from $1 to $2, $2 to $4. Think about that in $1,000. You go from 1 to 2 to 4 to 8 to 16. It takes the same amount of time to go from 1 to 2 as it takes to go from 2 to 4. Let's make those numbers a little bit bigger. It takes the same amount of time to go from 500,000 to a million as it takes from a million to 2 million. So time is the number one thing you want to think about. You don't want to wait because there are some reasons you might want to wait, and I'll explain that in the webinar for sure. But as far as if you have money available to invest, there is one thing, and it's time. You could make a lot of mistakes, but one of the biggest things is saying, I'll wait till the next stock market crash. But guess what? You probably won't, because you're afraid. Because the economy just went bad, and you're afraid of what's going to happen. Or you're afraid to put in money now because you think that it's going to go down, or you're going to be afraid when it's at the bottom. Guess what? Don't think about when it's going to be guessed. Nobody can guess it right. The best thing to know is that time is your the number one thing on your side. If you can start at age 11, you'd be doing a lot better than if you start at age 51. Time is just the power of compounding. Then the other reasons why I say 2021 is a great time to get started investing is that a lot of things in the financial world have turned into the favor of the individual investor. The first thing is that there are no commission fees to trade stocks. It used to be you needed to pay some amount of money in order to buy a share of a company or buy a share of an index or of a mutual fund. Now that's all gone. Robinhood came out and said we're not going to have any commissions on trading, and then every single brokerage firm followed that exact same thing. So rather than needing to pay $50 or $100 and having to save up a bunch of money in order to buy a bunch of shares, you can get started a lot easier because there's no upfront commissions from the brokers. A second thing is fractional shares. It used to be that you had to buy a whole share of something. Well, Amazon right now, which is one of the largest companies in the world, it's trading at over $3,000 a share. And for a lot of starting out investors, you don't have $3,000 to just throw into the stock market. And if you do, you don't really want to put it in just one company. But now you can do fractional shares. There are a couple of different brokerages that have moved that way, and once a couple have moved that way, they're all going to follow because they have to. And so now you can put $5 into Amazon, you could put $5 into Apple, you could put $5 into any company or any ETF, and I'll talk about that term later. That completely changes the game of investing. It no longer eliminates the ability for the little guy to get involved. You can get started with $5. Used to be you could only buy penny stocks for $5, and you don't want to buy penny stocks generally. They're not going to do anything for you. So it's a great time to get involved because a lot of those barriers no longer exist. Barriers that existed 5 years ago. It's huge. And then the third thing that kind of wraps into all of this is, as far as time in history, there is so much information out there that it kind of eliminates some of the need for that financial advisor. There are so many resources that have allowed individuals to feel comfortable to get started, including what I'm going to share in this webinar upcoming, of like how simple things you can do to get started, or joining a different kind of investment group or investment newsletter, as I have with the Motley Fool, to help you actually know what to do. And just, there's so much out there, and relatively cheap information as well.
All right. I can personally vouch for Robinhood.